our 4 advisory board panel guests today. Like I said before, between the 4 of them, they routinely close over $1.5 billion personally themselves every single year. So that's not involving their teams, it's them personally. So they've got a lot of knowledge, a lot of experience. I'm going to kick things off by asking them each a question, and then we're going to open up to questions for the rest of the room. Start with the ladies. Okay, Peter, here we go.
Every time I do this, I'm one of the few women on the panel, and you guys always do this. You usually start with the ladies.
That's what our mom's taught us.
Yeah, okay, ladies first, okay.
Okay, so Francis, ladies first, here we go. There's a lot of people in the room that are worried about private bankers stealing deals and they won't be able to compete. I know you just recently worked on a very large deal that you closed. It was 10 million plus. Maybe just tell us a little about where the referral came from and give us some background on how you received that deal.
Well, actually, the referral did come from a private banker. So, you know, the funny thing is that I'm a firm believer the only competition, you probably heard it there, the only competition is yourself. There really is no other competition out there in this world that's competing against you. It really, truly is yourself. So with that, network. My background, for those that do know me, I spent over 20 years at a bank. So I did have a lot of banking connections, and I kept up with my private banking connections. And as much as the rules have changed for us, the rules have also changed for the bankers. And developing those relationships are very important, and going in there like you've spearheaded on there, going in there with confidence, knowing what you're doing, and going in there and essentially selling yourself, lack of a better term, as an extension of their business. And that's how I preface myself with my private banking network. I'm there to provide the debt solutions. All they're interested in is the investments, and I'm not interested in the investments. But we work together in tandem as a team that when I come up with the debt solutions, very much as the slides that you've indicated, we're trying to make the debt as good as possible. So we're looping in not only the private banker, we're also looping in, I like to loop in also the accountant and get to know them. So anyone that is sort of the center of influence for that high net worth individual, and we're coming up with a plan that works holistically all together. So when I go in again to private bankers, that's what I'm selling them on. I am the debt specialist as you are the investment specialist with their portfolio.
Perfect. So yeah, exactly what we're talking about. Becoming an extension of their team. Like I said before, private bankers right now, the most important thing to them is their asset retention. They don't want clients taking millions of dollars off the books and walking over to someone else who has someone like Francis on their team that can help them out with a mortgage piece. Awesome. So Peter, over to you. We were talking briefly before we kick things off about private bankers and about some of these higher net worth clients that you were servicing. Maybe tell me a little about your strategy. And I know you did a little bit of a pivot this year on these guys. Are you finding it harder or easier to get some of these deals done these days?
Well, as far as getting the deals done, they're harder to get done, but that's to this community's advantage, because we're going to see when all these rules tighten up, when all these changes happen, this is how we make money. If there's no crisis and you don't have expertise, people don't need us. Don and I have been through times when business was booming and everyone was an expert, and as soon as trouble happened, first lines closed down, problems happened, and this is a parallel to what your question is. It's really a great time to be a broker. But you have to, we're always reinventing ourselves, accommodating the current marketplace. So some of you may not know this, but I don't advertise publicly, and I don't accept any clients that aren't introduced to me. By the way, I like to use the word introduce other than referral. It seems more personal. But anyways, the point is, I don't accept any clients, any walk-ins. You can't find us in Yellow Pages. We don't advertise rates. If someone calls us off the internet, we don't accept that business. My point is, our business is built on who you know. And I'm not even a great mortgage broker, but I can market and I can connect well. So mortgage brokering really is 80% who you know and how you market. So getting to the bankers, the high net value clients, those are not clients you typically get from a real estate agent. Those aren't clients you develop yourself. They're usually ones you inherit. And why do you inherit them? And I think I'm just repeating the message here today, is because these private bankers, at some point they're exhausted all their possibilities of helping these people any further. So they don't want them The kiss of death is they go to another private banker, and this happened to me, my personal situation. I just got beat up so long by this CIBC private banker, I ended up moving over. So I'm a classic example of someone who moved over, and my Royal Bank private banker is obviously unhappy. But the point being is, these advisors in private banking want you in their network because you're not an immediate threat to them. You're going to complement their business. You're going to, and again, if you think about the introduction, you're not fighting on rate, you're not fighting on fees. If once they're introduced, that's 90% of the battle. Unless you really screw up majorly, you're not going to have a problem. And particularly with these high net worth clients, because you're not saving them money by getting them 0.25% less. They don't care about the $1,000 you're going to save them per year. They're looking at a strategy, a plan, short-term, long-term. At the end of the day, they save thousands of dollars. And that's always been our mantra, always been our sale pitch. You didn't call us to save $500 a year. You want to figure out how you're going to save $5,000 a year. And that's all about designing and structuring and doing all the research. Earlier, you were asking about what's the value proposition. So the point is, when these VIP bankers say, hey, this is my client, and we get this all the time, primarily from credit unions, so maybe later we'll talk about how we market people in private banking, credit unions, and what our value proposition, because we tell them we're not in the financial planning business, we just want to complement your business, you're not going to lose them to the bank, and of course I just sell our services as we're the personal researcher for your client when it comes to the mortgage. And you mentioned it earlier, mortgages are low margin products for all banks at all levels. If you talk to any banker and they say, hey, I want to take one product away from you, the banker will always say, just take the mortgage. I want everything else. I want your checking, I want your savings, I want your investments, but take the mortgage, because we all know it sounds like a big figure, sounds like a lot of money, but the margins are so thin. So anyways, I hope I answered your question.
No.
But the point is, it's a great referral source. Again, for you that don't know me, I don't go after realtor business, but this is a segment I do go after. And without being too long here today, when I do my marketing, my marketing pieces, I write everything, but a marketer sends it out. I tailor make it for my target market. So maybe later on we'll be talking about how the material that I would send that private banker compared to the material I would send the guy who is a construction worker, yet I need him to send me all his friends and families as well.
That's awesome, Peter. Thank you. You always have so many good nuggets you can pull out. I'm a big fan of sound bites, and I use that in marketing. One of the things I just took out from you, and I just wrote it down, was you're the personal researcher for your clients. And you do that when you're networking with credit unions. So you're not walking in there as a competitor, you're actually working in there as an extension of their team and as a personal researcher for their clients. Small sound bites like that matter, and I know you probably said that over and over and over again, but if you are going to hone a small, simple part of your game, when you are walking into the bank, these subtle intricacies on how you position yourself are so important. And it's whether they're going to open the doors to you or not. So thank you. Moving down the food chain, let's talk to Scott. Now, Scott, you're notorious for landing these big fish, if we will. And what I mean with that is multi-million-dollar deals consistently. And I know you do regularly some smaller deals, but that's not your forte. Maybe just tell...
I do all the deals, all deals.
You do all deals. Okay, good. That's cool. So let's talk a little bit about how you're finding these multi-billion, how you're getting them like consistently. Like it's not 4 year, 3 year. This is like consistently X amount, and it's a very high percentage of your business.
Yeah, I mean, it all comes down to me is business development, right? I spend a lot of time doing business development as opposed to doing, underwriting fulfillment. And part of that comes with the amazing people that I've surrounded myself with over the last 10 years in terms of infrastructure. As an example, I know a lot of people think it's crazy, but like I've never been in Filologics. Well, in the last year or two, I haven't been in Filologics, right? I spend all of my time working with relationships, managing my clients, my referral sources, and spending all my time just really trying to figure out how I can solve problems for clients and referral sources. So I don't spend a lot of time focusing on getting into the deal. I focus more time on how do I find the deal and making sure that all the different entities involved in that deal are having a good experience and I'm providing the right advice. But the problem with that is that, you got to figure out how you create the right infrastructure, and that's what allows you to go out and be strong with business development. So if you don't have the proper infrastructure around you, which comes through experience in the days where I used to be, when I was 24, running to Staples and faxing things and scanning things and meeting clients for coffees and running all over the place and having documents everywhere in the world, it took me a long time to figure out who I could bring in to support me from an underwriting perspective, a fulfillment perspective, so that I could focus on what I'm good at. And if you talk to my referral sources and you talk to my clients, they don't want me really overly involved in every aspect of the deal. They want me involved in certain aspects of the deal that they know that I'm going to succeed at. And what a couple of the panelists were saying before when they were talking about the private bankers, I met with one of the bigger private bankers at RBC last week, which sounds funny because RBC not being in the broker channel, but he always told me that he's a relationship management person, and he always hated talking about credit. He thought that credit was the deal breaker in the relationship. He loved the investments, he loved the day-to-day banking, but every time credit came up, he felt like that was kind of the bad news, right? He was going to have to go to his client and tell him that they couldn't do something, and that's where we established a relationship because they want to keep the investable assets, they want to keep the credit facilities, they want to keep the day-to-day banking, but he wanted someone else to be the bearer of bad news. And then when he found out that I wasn't necessarily the bearer of bad news because of all the different relationships that we have access to in the broker channel, it became a really flourishing relationship, and we do a lot of business together. So, Roland and I talk a lot about, how I go out and get these multi-million-dollar deals, which I'm always kind of working on, both residentially and commercially from, I think the last year we've been doing stuff, 6 million, 8 million, 10 million, 12 million. We're playing around with a $30 million residential deal this last year. So some pretty cool stuff. And really what that came down to was a combination of, one, doing the business development, because I always tell people, if you can't get the deal, then nothing else matters, right? You can be an expert at everything else, but if you can't get the deal, then you never had a sniff at it to begin with, right? So you got to become someone that's trustworthy in the field to be able to get that origination business. But then you have to know what you're doing, right? You have to surround yourself with the right people. You have to get educated. You have to understand the lending policies and procedures. Like, you just can't go out there and do business development, which is what I tell everyone I do, and it seems fun and it's all good. You meet someone for a drink, you have a coffee, and you get a deal. But there's a huge amount of education and background that goes into that in terms of understanding what's available. So, the other day I saw Don Lee was in here from Mortgage Architects. He did a post on, a bunch of different mixed mortgage investment corporations who were going to be attending an event, right? And I just screenshotted all the mix on that list, and then I sent it out to my assistant, and I was like, hey, can you go through and just get me a contact at each of those mix, right? Now it's just me trying to find out other lenders in the marketplace that maybe I haven't explored and finding out what their niche products are so I can add that to my value proposition for my referral sources and my clients. So, I'm a big fan of the business development side. Doing it early in the morning is probably the best time. If you guys ever heard like Dustin talk, or you've read a bunch of business development books, they talk about eating the frog or the power hour, which is spending the majority of your time doing the right activities at the beginning of the day. So as opposed to maybe focusing on underwriting or following up with client emails or whatever it is you do in the morning, focusing on where you're getting your business from, which is those business development activities. And so I kind of live by that, and I push aside a lot of other activities to make sure that I'm focusing on the right activities, which in my mind is originating new deals and business development and making sure people are happy and the customer service side of the business. So that's kind of what I'm doing right now.
Quick follow-up question, and there's a lot of good stuff in there. First of all, Scott's talking about business development, and that's a lot of the course is about, but he's also talking about building relationships with lenders, and we're talking about mix. So in case you missed that, there is a trade show coming up, I think it's next week, and it's a whole bunch of mix coming, 20 of them. So if you're looking to build your private side of network that doesn't fit into your traditional Filogix box, then that's one thing. But I had a quick question, and maybe you structure it, maybe you don't, but in terms of business development, I know that's the core, and that's why you are successful. How do you see your day or your week, and do you have a set routine? Do you do certain things, or do you actually just kind of go with momentum on how things are playing out?
Yeah, so I'm a big fan of like block time. I always look at my calendar. I used to block time every day. I would set aside time for certain activities I thought were the most profitable activities. I put them typically at the beginning of my calendar. Life just gets busy, and I end up getting frustrated because you start making these to-do lists and putting these activities on your calendar, and then you miss it, or how it is in this industry, like something pops up, and you got to do something different, and it'd be a really frustrating process. So I kind of narrowed down a list of 20 activities that I think I should be doing every single week. I probably have a list of like 200 things I should be doing, but I narrowed it down to about 20 activities. And I now just set a goal for myself that I'm going to hit those 20 activities every single week. It doesn't matter when I do them or how I do them. I used to, when I had more time, I would do those activities, or the majority of them first thing in the morning. I thought that was when I was the most awake. I was having coffee. I love talking to people first thing. But now I just set up top 20 activities that I should be doing every week. I check them off. I make sure I do all the 20, and I just, I got to get them done before the end of the week. So typically what that ends up, like for me, what happens is I just end up doing them on Monday. I do all 20 on Monday because I don't want to leave it till Friday, and I try to bang them out first thing on Monday. So typically I've got all 20 things done before Monday, and then I find other things to do. So that's just my personality. But if you can come up with through trial and error the different activities that are working for you, and it's different for all of us. We've got different networks and relationships. Things are going to work for you. If you can figure out what it is that works and what isn't, and you can focus on the activities that are working, and create a checklist or block some time on your calendar, you'll probably have a lot more success than just thinking about doing it and not actually executing on it.
Awesome. There's a follow-up question there, and I know someone in the audience is going to ask it. So I'll move it on to Don. Now, Don, for those who don't know Don Stoddard, he spent many years doing business development, and he's now got a successful book of clients that are referring more and more clients and more clients. So it gets to be kind of like an animal, a snowball rolling down that hill, just growing with momentum and speed. One of the things I wanted Don here to talk to you guys about is once you get to a certain level of income, a certain level of success, what do you recommend, and how do you recommend for anyone, I guess, starting out who's looking at working in the space to structure things financially that can actually help them? I guess my point is, if you had to do things differently 10 years ago than where you were today, what would you do differently immediately in terms of setting up your business?
Oh, all right, that's a long question. I guess your career really changes as you age and go through. This is 32 years for me now, so that takes you back to the point in time where we didn't even use fax machines. So just to give you an idea. So things really do change. So what you realize as you get older and your career advances is you really need to know what the end game is. You really need to know the destination that you're trying to get to. Other simple things in life, you hop in your car today, I didn't know where I was going, and you plug into the machine and it tells you how to get here easily and effectively, and it's autopilot and away you go. What I find in our industry, and I've been in it a long time, is there's a lot of great salespeople. There's a lot of people that make a lot of money, but there's not a lot of wealthy mortgage brokers. There's simply a handful. And it's really because I don't think they plan the end game. I don't really think they truly understand what they want to do by the time they're done. And done doesn't mean you have to quit, but you had to achieve at least your financial goal at that time. So one of the big things that I did, and most of my net worth came in the second half, was once I incorporated a company, you realize that you don't need to draw down all your income, right? It's very important. And you always have accountants saying, unless you're making $100,000, you don't need a corporation, blah, 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 blah. But if you were like me when I was younger and I went to the bank and I saw that I had $60,000 in my bank account, right? It was like, yippee-yay, let's go spend some money, have some fun. There was a point at First Provincial that I wouldn't even take a paycheck unless it was $50,000. So that was the thrill. But as soon as you incorporate, you realize that there's tax effectiveness that comes with that, right? All of a sudden, corporate tax rate is less. And if you don't need the money today, you can leave the money within the corporation. And by leaving it there, you're going to lose less of that income on that money to the government. And then as that starts to grow, you realize that there's vulnerability there, because if you ever get sued as a corporation, right, you could lose that money. So you very quickly understand when you're doing this that it's time to open up a holding company. And a holding company is another company that you own, and of course you're paying taxes on these companies, but you're sliding your assets across to another venture that basically is designed to build your future and to get you to your end game. So as a mortgage broker, it's evident to me, it was in the beginning, that I was not going to receive a pension of a school teacher, or I'm not going to get a pension of a fire department or somebody in government. And I went to talk to my financial planner, I talked to my accountant, I talked to my lawyer, said, like, what do I need, what do I need, and what do I need? And all of them came back with no answer. They all virtually said, Don, I don't know. And the reason they said, Don, I don't know, is because they said, Don, I don't know what you're going to spend. So I had to reverse engineer everything. I've shared a lot with the people that I know, and went back and said, what does it look like in the end game for other people other than myself? And you found out that the great majority of mortgage brokers, in my opinion, and the great majority of the public that doesn't have a pension, in my opinion, by the time they retire, if they haven't taken care of themselves, or you have $30,000 to live off of. That's it, 30 grand. That's your CCP and old age pension, and that's assuming that your house is completely paid for and you've got fork to knife and you can eat 3 meals a day and nothing else, plant tomatoes maybe. And then I thought, well, that didn't appeal to me. The next bracket was kind of that school teacher, the fire department, all those people. They generally have about $80,000 in disposable income, and if that's all paid off, then they can still maybe sell the bigger house, go to a bit smaller house, probably change from foreign cars to domestic cars, still go on a holiday if they like to every once in a while, and maybe if they have a hobby, golf, dance, theater, whatever, do it on an occasional basis. And I said, well, that seems not bad, right? That seems better than certainly 3 square meals. And then I did more research and found out the Yippee-yi-yay Club. That's what I call it. It's my own word, Yippee-yi-yay. And Yippee-yi-yay basically means you get to do whatever you want. You have enough revenue coming in. If it's $180,000 to $200,000 a year that's coming in, it's passive income by that time, so it's not going away. You're not taking any of your principal money down. You're looking at the $200,000 and you're saying, okay, what do I do with it? Well, you can have a house in the north, certainly a cottage in the north and a house in the city. You can have one here and one in Arizona like we do, or you can do whatever you want at that point in time. So everybody in the room has made a lot of money. And I've been with a lot of companies over my time. There's very, very few wealthy people in our industry. There's more people that have gone bankrupt in mortgage brokering business. Maybe real estate would be a bit more. They've been on a good run since 1993, and I guess the mortgage brokerage business has too. But I think Peter can attest to it. I think I've known Peter 30 years, close to, right?
I was in high school, met him in high school.
Yeah, right? But people like Peter and some of our other friends, some in the room and other places, they haven't been at the top of their game for the last 3 years of their business. They've been at the top of the game for the last 25 to 30 years of the business. And some of their greatest earning potential might have been when they were younger, and they may choose to do different things now. So if you've taken care of the end game, you can always have somebody else that you hire to do your business. You can still process your income coming in. You can start to take time with family, which will be difficult for you if you just had a new son, because that's a whole different thing that comes into play. But figure out what you want. Do you want 30,000? Do you want the middle, or do you want Yippee-yi-yay? And then reverse engineer it. All the financial planners, I have 4 that I deal with. There's a Sun Life one that I deal with that's relatively new out of Barrie. I have a Royal Bank one that I deal with. I have an IPC one that I deal with, and a National Bank. All 4 of them, I get advice from on a regular basis as to what your return on investment look like at retirement. And if you have a private portfolio of mortgages through your corporation and your holdco, you're probably looking at a good yield safely between 8 and 12. I think if you wanted to go really conservative, 8 would be easy, 12 is good. My other half of the money that I invested, let somebody else run that money for me, just in case I screwed it all up. So on that side of the fence, that person's telling me by the time I retire, if I don't want to take risk, I'm probably going to earn somewhere around 4%. So the neat thing about that is the RSP money that's invested is earning an interest rate that I can draw down, and then the holdco company can come down to me and I can balance my income and make it tax effective between myself and my wife. I had a family trust. It's not as valuable today. I don't know if anybody else, did you have one? Yeah. It may not be as valuable to you guys today as it was when we had it. We paid for all our kids to go through school, university, college, all that stuff through the family trust, paid it tax effectively at 15%. The concept is love money, right? Love it. And when you meet people, they don't understand what love means, or they have a whole different meaning than I do of love. Love is hold on to it, cherish it, watch it grow, see what it can do for you. I drove a Mazda 3 for like 10 years with 400,000 kilometers on it. I could afford more, but I didn't need anything more. But that money grows. Most people love it, and they treat it for what it gets them, not holding on to it and cherishing it. So my advice to everybody in the room is know what you want to live like in the end. Put your money away today. The earlier you can do it, the better it'll be. And obviously figure out your structure so it's tax effective. The first thing that I did when I got into business, I think I was 26 years old, I took out a $1.4 million life insurance policy because failure was not an option for me. $1.4 million to my financial planner gave enough return on a conservative basis with my wife to give her that 75 to 100 grand a year to live off of. And that corporation pays that policy today, so it's tax effective again. And when it comes out to her, she doesn't have to pay any income tax on it. So structure is important.
So Don, thank you for that. Don could actually, when he told me he was going to talk about this topic, I thought it was relevant. It was it's very important to have a plan. If you fail to plan, you plan to fail, as they say. One of the things that Don hasn't told you is when he's working these 4 wealth planners, Sun Life, he's working with ICIC, all the different advisors he's getting advice from, he's building that into his business. So he's got 4 different mentors right now in the financial planning arena that he's able to talk intelligently to his clients. I know we were talking with Don, you're actually more of a holistic financial planner, and the debt side is one of them, yes, but you offer advice based on this, and you're not selling products necessarily, but you are pointing them in the right direction based on personal experience. So that's awesome.
It's 100% true. I talk about the asset side, like you were saying, and I talk about the liability side, and I definitely tell them that my side's to manage the debt and make sure they have professional people to manage the asset.
Which has no doubt helped grow your business. I'm going to open up the floor right now to questions. I know Tom had one off the cuff. So feel free. So when you're going to ask a question, maybe just direct it to someone. Remember, we got Peter, Francis, Scott, and Don.
How you doing, gents, ladies? Question I had a couple deals. One was a $1.8 million large one that was referred from RBC, and the other one was $2.4 million. Had them signed up, ready to go. At the end of the day, they ended up getting 25 basis points lower pricing from RBC, and I lost both of them. What do you do in a situation like that from your experience?
We'll do a duet. We're going to do a duet. I guess the first part of it, you said you got referred over by RBC and then they pushed it back. Is that my understanding?
Correct, yes.
They couldn't do the deal initially?
That's right.
Okay. Typically I'm very much like Peter. I rarely advertise too. And part of my team's here and they can tell you that too. I keep myself pretty quiet and I work by the network. Which means when I work by the network, when they refer it over to me, it's very rare. Like I coach my referral partners that I'm not about price. I'm about structure and about short-term and long-term solutions. So if you're going to come to me you think you're going to find necessarily the best price, basically I say point blank, don't waste my time, don't waste your time. Right? Like I'm willing to walk away from the deal before it even comes in the door to sort of set the stage and set the ground rules of how I operate, because I'm not going to invest my time and interest into the client if you're going to turn around the 11th hour and walk away. So how would I handle that? I would go back to the banker, first of all, that referred it and say, what the hell?
So I just want to, while it's fresh on top of mind, I think what we got to pause here and think about every transaction in your life, doesn't matter if it's your kids, it's particularly your wife, or business, it's all about expectation management. So when you took on that deal, in my opinion, I would have managed the expectations of the RBC guy, and particularly the client. And I've been in those situations, and I think Scott can expand on this more of it, but I definitely, first of all, I judge their moral compass. I go, we're going to do all this work together, you, me, we're going to put all this effort into it, and at the end of the day, where does that leave me if someone else matches or does better? Let's get that down in writing, let's clear that up now for better and more pleasant experience for everybody, not to mention wasting your time. So I have that kind of agreement drafted, and then of course, there's no way anyone in my office would even consider any marginal deal. It doesn't even have to be 1.8. If it's any kind of marginal deal that takes X number of work hours, they always sign a client disclosure right up front. They're committed to that fee, hell or high water, if they don't follow through. Now, it's not the full fee, but we agree on a fee, and we make and again, getting back to the moral compass, we kind of guilt the client into it. Go, would you want me to do all this work? And my colleague, Andre, is so good at it, he lets them pick the fee. And the fee's always higher than we expected, right? We say, what do you think is a fair fee? And then we say, do you think $5,000 is a fair fee? Oh yeah, we think that's fair, or we'll let you pick it. And everyone has always paid that fee, always signed that disclosure document, and never had a problem.
I'm just going to throw one last thing. I'll give another story. I just actually had something very similar to that with the private banker actually last week. Guy hasn't sold his $2.5 million condo, but a $3 million property, closing in 10 days. And the banker's freaking out because it's still not approved. And he says to me, can you do the deal? Okay, tell me the particulars. Told me exactly the way, the pricing, the structure, what he's looking at. Again, I go worst case scenario. I think the worst thing you can do when you deal with a high net worth client, don't paint the picture of roses. You want to give them worst case, right? So, this is what you're looking at, worst case, your pricing. Do you want me to move ahead? But better yet, how dead is the deal at your end? That's what I want to know before I even start to invest any time into it. How dead is the deal? Is this because of pricing, or is this because of structure and there's no hope? The deal's being escalated at credit is what I was told. Okay, great. Why it's being escalated? Essentially, at the end of the day, what did I do? I helped him mitigate that deal to get the deal done, because I know he's going to send me the next client that's going to be a longer time horizon to get it done, and there's not necessarily a chance I'm going to put in all that time and effort, because I knew from that structure that deal would eventually likely get approved. So I'm not going to waste my time. You have to be willing sometimes to walk away.
Yeah, I think you're going to just lose business too at times, right? You have to be comfortable with that, and I think that it's a business where you got to try to be as efficient as possible, and you learn from your mistakes. I've had months where I've lost like $30 million in a month, and I was kind of frustrated with that. And I look back on some of those experiences I had earlier in my career, and a lot of the time the blame was on myself in terms of how I handled the relationship, and I learned from that, or was it maybe the referral source, or was it the client? So I think it's a learning opportunity to say what went wrong in that. In those two transactions, was it not the right referral source? Was the communication not there? Were the expectations up front not set appropriately? What was the communication like with the client? Because at the end of the day, I think what everyone up here will tell you is that most of the time at this stage when we're getting business, it's very rare that deal is going to go elsewhere because of 25 basis points. And that's typically just because of the expectations we set forth at the beginning, the type of relationship. We may have asked a couple different questions that you asked that would have that conversation may have been 10 seconds, and we would have said, no, it's not for us, just because you knew that it wasn't going to really ever come to fruition, and you would have put in a lot of time and lost it. So, I think everyone up here at some point in their career lost a ton of business, and sometimes it's just going to happen. Other times it's a great learning opportunity, which probably is probably the youngest one on the panel, I'd say. I made a ton of mistakes. I lost a lot of business, especially earlier in my career. And now I'm pretty fortunate that by the time a deal gets to my desk, it's really about interest rates, basis points. It's more about there's just a great relationship between the client or the referral source, and we get it done.
That's going back to what Peter said.
Yeah.
You create the expectations.
Yeah, the expectations.
With not only your client, but also your centers of influence and control partners. You know your value proposition, and you stick to that. There's no deviation. Like even if it's a $50 million deal hanging over, you never deviate from what your value proposition is.
I agree with everything that was said, 100%. The only thing I would tell you to add to it, it's only one deal, or it's only two deals, right? Because emotionally, you'll kill yourself in this industry. If you do the mathematics and figure out your commission on stuff that you haven't closed, you'll just kill yourself, right? So it's just one or two, so it's easy to pick up one or two deals the next month.
Good. Lisa.
Hi. I'm wondering, I work with a lot of independent financial advisors, and so a lot of their referrals, the clients are high net worth or self-employed. I wonder how you handle when really the only option is going to a bank, and obviously they're saying, I want to protect the client. I know what conversation I have, but I'm just curious. I find a lot of my deals are approved for whatever reason for exceptions with a bank, and obviously independent advisor is going to be more concerned about their asset portfolio being scooped up by the bank. I know I position it like, well, I'm their only point of reference, et cetera, but I'm curious what lenders you work with and how you handle that.
I guess you have to realize it's sometime who feeds you. So if I was going to get a large referral from my top financial planner and the only way I could get it done was to send it to Scotia, I would certainly call the financial planner and get their opinion and give them that opportunity. Because you have to figure that out too, right? I mean, you have to figure out where your business is coming from, what the trunk of it is. But I think if you explain it to a good financial planner with the same roles, expectations of what you are, they'll probably support you on that. But definitely go back.
I'm the same way. I think it's just conversation you have up front. It kind of everything goes back to the same thing, just the communication, the expectations that I think most of the time when we're getting business, we're supporting that financial planner. Like we're creating a solution, so you got to look at it from the perspective that we're not part of the problem, we're part of the solution, both for the client and the financial planner. And there's many different ways that you can build that relationship with the planner. So if you guys are having that conversation and let them know that you're not doing the insurance, you're not moving investable assets, you're not doing the credit cards, the debit cards, the day-to-day banking, like you're just providing a solution when it comes to the credit structuring. A lot of the time, it's really not that big of a deal where that mortgage is placed.
stealing it from me. Majority of my A side of the business is all major banks. And my financial advisors and private bankers I work with are completely comfortable with it. Because I think what we tend to forget, it's about, again, the confidence in the relationship. The client has a strong enough relationship with that personal banker and that advisor. And if that advisor and personal banker is strong enough with it, and I don't know who said it about it being a commodity, a mortgage, and being movable. Peter, was it you that mentioned that? Somebody mentioned that. But anyways, in the banking world, the mortgage really is, they consider that the anchor. That's the anchor piece, right? And the reason that banks want mortgages is they're hoping that you're going to take the rest of the investable assets. But if the relationship's already established on the other end, very rare that happens. And again, the personal banker just wants to get the deal done. That $10 million deal, for example, personal banker was BMO. That deal was placed at Scotia.
I think there's an opportunity too, when you're dealing with the client, to let them know that the reason we're putting you where we are today is this is the best for you at this point in time. I am very, very detailed with the client to say, we're not going to build any brand loyalty here with your mortgage, right? This is just a necessary evil that we have to put you here at this point in time. And when the mortgage comes up for renewal, in all likelihood, we'll be looking at all the alternatives in the marketplace. And if there's an alternative that's better, then so be it at that time. So I make sure I tell them, look, don't change your banking, don't change this, don't change that, don't change your policy, don't do all that stuff, because you're going to drive yourself crazy. Every 2, 3, 4 years when you're making a transaction change, you're going to be moving all that stuff.
On this one I know, because I have this situation all the time. And again, I don't want to harp on it, but it comes down to communication and expectation management. So first of all of us should try to avoid banks when you give them mortgages, but sometimes you can't. You got to go to Scotia for ratio exception, but do whatever you can to avoid the banks, because not only do you lose the control of the client, or the higher probability is higher, so does your sphere of influence. But sometimes you got to go to Scotiabank. That's kind of your lender of last resort. You prefer TD. At least they don't sit there and hammer the client. But it doesn't matter who the lender you decide is, you manage expectations front. What I do with my financial planners is we draft a letter. We have a little marketing piece and we say, just so you know, exactly what Don said, this is part of your entire plan and this is a temporary solution. Right now, Scotiabank will accommodate you. I don't know about you guys, but I only do variable. And we're gonna revisit this in 12 months because your financial planner feels we may have to, and it's a HELOC and it's a step and we might change it. So that's all about management expectations. So my best answer to you is, have it communicate in writing if you're, obviously you're going to clear with your advisor, hey, dude, I can charge them an extra quarter point, but they're going to have a First National, we got no worries. Or I got to send them to Scotiabank, what do you want me to do? Blah, blah, blah. So you go to Scotiabank, then you write the communicate. It's very simple, it's very brief, and this is how you get business from all the other financial planners' circle of influence, and you say, hey, Mr. Client, in a few sentences, and you explain what's going on, why it's going on, and how you're expecting them. All the future communication, mortgage or otherwise, is with John Doe Financial Planner and myself and no one else. And I've never come across a consumer that didn't think that was a fantastic idea. Because they all feel that the institutions and the people selling the stuff are just, it's like I always tell them, talking to the TD Bank is like going to a Ford dealer and saying, what kind of car do you want to buy? It makes no sense. They don't educate you, so we're your educators. Don't do anything, don't talk to anyone until you check with either one of us.
You, as well as we, hear all the time about the rate hubs of the world, whether it's the Butlers, they're competing at that last nickel or 5 basis points, come here to get the best rate in town, etc. What you were talking about as a business is a totally different way to look at the business. In your experience and in the past, what percentage of our overall broker market, not the mortgage market, but the overall broker mortgage market, do you think is operating at that highly competitive last nickel, last discounted price that's occurring?
I could tell you 2 things after 31 years. If 80% of our business goes to that model, we won't have a business. Because banks are smart enough and lenders are smart enough to open up their own websites and their own discount centers and not have to pay brokers. So I would tell you, if you're in this room and that's your business model, all the best to you. I think, honestly, collectively, us as a group should lobby our lenders that allow them to do that and stop dealing with those lenders. Brokers do not understand the power of control that they have. I can say that from day one. You are the generator of all. Without you, nothing happens. The problem is, collectively, nobody likes to work together because we all have ADD. And we all think we're each other's competition. So, number one, rally the troops around you, talk to lenders that are going crazy like that are providing that services, and make sure you deal with that, number one. Number two, you know, there used to be a car sold that was a Lada in Canada. Anybody old enough to remember that other than me? Okay, we got a couple of hands. It was the cheapest car you could possibly buy. It doesn't exist anymore, right? People will go to Starbucks instead of going to Tim Hortons. People will do those things. So when you talk higher level of service, higher level of intelligence, higher level of one-on-one commitment to those people, the due diligence and your teams and everybody that's helping them, people respect that, and we'll continue to do that way. If you ask me to guess, less than 10. I would say less than 10. Right, when you add them all up, the or the Butler, everybody hates because he tells everybody that when you get a deal, call him to see if he can beat you. Right? Like, it's just unbelievable. But what's the other one that's downtown? True North, and there's one more, Rate Hub. And Canwise. So there's 4 that I know of. So I bet you it's less than 10.
Time for one more question. Does anyone have a question that hasn't been answered that you're dying to know about? Steve, grab your mic.
Just want to know how you folks go about nurturing your referral partners and maintaining and cultivating that loyalty that you have with your partners. Any special techniques or activities that you do?
Yeah, I love that question. I think that's one of the most important things you have to do, right? And I always tell people that you don't have to become best friends with everyone you do business with, but it's nice when you have that type of relationship where you just get along, right? And so I think that a lot of people these days get tied up in complicated CRM, they get tied up in emails, they get tied up in this virtual world we live in, adding someone on Facebook, creating an Instagram account, and doing all these different things that are okay, but I think it takes from a lot of the true ways that we build relationships, which is face-to-face, it's telephone calls, it's texting, it's just communicating appropriately how you would expect someone to communicate with you, how you should communicate back with them. So, you know, I take out a significant amount of realtors that I do business with that I've established really sincere relationships with over the years, and I probably have 15 or 20 that, you know, we just get together throughout the year, probably once a quarter, whether it's a drink, a coffee, a dinner. I sometimes bring them out in the same room, and people always wonder, you know, you bring out realtors in the same room, isn't that kind of like counterintuitive? But it's not if you have a good relationship, because the good ones realize that you're providing a value add, and they appreciate the fact that there's other top realtors in the room, that you guys are all doing business together, like there's enough to go around. With clients, I told this story, I did a podcast for Scott Peckford. I told him about buying wine, and I used to buy every single client a bottle of wine, and I'd write their name on the bottle of wine, and then I'd give them a bottle, and I'd keep a bottle, and then until my wife got mad because I had a lot of wine. But I would write down a name of every single client on a bottle of wine, and I did that, and I'd send them a bottle, and then what I would do is I'd store it in the wine cellar, and then I would like open it up one day, maybe with a buddy or a friend, and I'd look and I'd see it's a client. It could have been from like 5 years ago, or it could have been from 3 weeks ago, and then I'd shoot them a text and just say, hey, did you ever have that glass of wine, or that bottle of wine? And I stopped doing the wine recently, like not everyone drinks wine, so things ebb and flow and change, but I just think like anything you can do to have face-to-face contact, to have real relationships, and to just get out of the day-to-day technology that's in front of everyone's face and just be a real person is going to go a long, long way. Because at the end of the day, when I look at the top referral sources I have, and I don't know about the rest of the panelists here, they're all people that you can call, you consider them friends or family. If you're getting married again, they'd probably come to your wedding. Like those are the types of people that I find are the ones that help build my career to where I'm at today. So
I consider a good appointment to end with a hug. I know that sounds stupid, but that's my intent. Every customer that I meet, every couple I meet, I want to make sure I shake that gentleman's hand and get a commitment from that gentleman for a referral in the future. You know, it's simple. Have I done everything? Have I met your expectation? Is there anything more I can possibly do for you? And obviously you keep answering questions till they run out, and then you simply just ask one. Can I please ask a favor of you? Would you be kind enough to send me 2 referrals over the next 18 months? Simple as that. And they'll always say yes, right? You can call them up in 6 months and say, hey, I'm just checking in, see how you're doing. Want to follow up on your prepayment privilege. I'm not calling you about the referral, right? Just throw it out there. I'm not calling you about the referral. Don't panic, don't sweat. Well, of course, they're going to remember again. right? And if you can end in a hug, you got a client for life.
Everything they said. But you know what, I'll kind of tie into what you were asking about there about the low rates as well. It's interesting, there's a study that was just done right now, and there's, you know, the big trend of business to business, B2B. They say the new trend moving forward, even though there's technology today, is human to human. That human beings are more craving the hug at the end of the transaction, the text out of nowhere saying, did you enjoy that glass of wine? I think we are forgetting with technology that it should be automated. And it should be the best rate or searching on your phone. But that's why social media is so powerful, because it gives that human to human connection touch. You know, the only tip I'll tell you to do, and I don't want to necessarily share what I do or what they do, cultivate it to what feels real to you, right? Like what in a transaction feels real to you, give that back to your centers of influence, and the right centers of influence that should be working with you are the ones that are going to appreciate and stay with you. That's what you want. You don't want to force relationships. You want the people that you gel with to work together, and those are my best referral sources. I could probably count them on my hands, but those are the ones that give me the majority of my business. But I know if I call them or they call me at 3 a.m, I'm there for them. Do human to human.
So for Frances, I had a baby like 7 weeks ago, and Frances popped into my office. We both live in Oakville. And just like as a testament to the person that Frances probably is with her clients and the referral sources, it's a pattern, it's a habit, it's something that you just believe in and instill what activities you do on a daily, weekly, quarterly, annual basis that are going to build and cultivate those relationships. Frances pops by my office with a baby gift, not expecting it. Super cool. Again, you'd think we're brokers, maybe we're all competing with each other, but there's been numerous deals, especially when we get into some of this, ultra high net worth stuff that I've called Frances on, and she's called me just to run it by each other and say, hey, are you in the same page as this? Because we kind of have that. If we both agree with the answer, then we're probably going to be right. And so that's yielded some success. And so there's enough business out there that we can work together, especially, I know that we're all big advocates for the broker community and working together. And there's a lot of peers, we're all peers in here that can do some really special things for our clients. And if we act that way, we're going to get more business and we're all going to have successful careers. And so just on that point with what kind of activities people do, Frances didn't have to pop by my office. We're not, we don't see each other every single day, but she popped by, dropped off a gift, and I was kind of like, wow, this is probably how she is with her clients and referral sources. And I was super impressed by that on a personal level and a business level. So, it just goes to show you that if you do the right things, you'll probably build those relationships. So.
We'll wrap this up for you, no worries. By the way, I want one of those hugs now before you go. A long one, too. Doesn't count if it's not long. Okay, so I think the question was, how do we keep those referral sources on track? Okay, so for what I do is, this is going to be good because I don't meet anybody. I don't know if you know that, and I don't think you should. Because especially with the high net worth clients, it's integral part, you got to meet them. But I might meet 6 clients a year, and that's not necessarily a good thing. But if I did ever want more business or more high net worth clients, you got to meet people. If you know Tom Hogg, he sits in everyone's living room 3 times through the transaction, and those guys they stick to him like glue, and all those friends do. So that would be a good thing. I agree with all you guys. I don't do it, I probably should, but I'm all about only working so many hours a week. But what I do, because I don't have that, I'm going to just finish that story because I used to deal with a lot of realtors and I never met them, and I'd have one big meeting every year so they get their CEU credits, and realtors would be hugging me. I never met, but I talk them on the phone like for 10 years, 5 times a week. I'm not proud of that. I'm just telling you the opposite side of the story. So the point being is, what I have to do, because I don't go sit in their living rooms and I don't do those things, but you should do those with high net worth. And I do try to do with high net worth clients. But remember, that high net worth client's introduced to you by a trusted referral source. They're busy. It's a world of technology. They want to be efficient. They don't want you to come in if they can avoid it. They want you to get the job done, from my experience. But where I was going with that is, so I have to do more. So I do have to, like when someone's introduced, I write them an email. Big thank you. Thanks for introducing so-and-so and having the confidence in me. And when it's a financial planner, I give them a bit of a report. But you're right. It's not a template. It's not CRM. How long does it take to send a message? Hey, just so you know, John Doe was here, and if things are moving along, he's going to be super happy. Whatever, just to make those touch points. So my point is, if you're not meeting them, you got to keep in touch with them email, not so text is a little too personal, and just kind of give them a report. And some financial planners are super high maintenance, they got to hear from you every day, and other realtors don't want to hear from you unless there's a problem. So you got to kind of have that kind of relationship with them. And the last thing I'll say is you got to write pieces that are relevant to that point, right? I want you, and when I say pieces, there's an art to writing pieces. They got to be short, because in this day and age, we all have ADHD. They got to be short, they got to be to the point, and they got to be not too much information, so there's a call to action. But the point is, you reach out to those people and you give them updates. Whatever's relevant for the VIP banker, you send them a little, hey, here's what's going on this month, blah, blah, blah. I got some extra private funds, blah, blah, blah. You send them a case study, whatever the case may be. So the point is, you got to drip on them, and unlike what Don said, every communique says it's super important that you introduce other people to me. I won't give you my mission statement because it benefits you and it benefits me. So every communique, subtly, I don't say you got to refer people to me. I go, keep me in mind. Every communique starts with, hope you've been enjoying my updates. This is how I'm answering your question. Hope you're enjoying my updates. Please be sure to share them with others you want to know that would like to save money on their next mortgage, right? Every communication starts like that.
That's awesome. Guys, I want to give you, and please join me with a big round of applause for these guys. Fantastic, phenomenal, huge knowledge base. Don, Peter, Francis, Scott, they don't get paid to do this. They're just coming out because their heart is in the mortgage business and they want to genuinely help people. So I want to thank you for your time, first and foremost. I know that's invaluable, and thank you on behalf of everyone here for sharing your experiences. Thanks again.